Whew. Hello, everybody. Hello. All right. I'm outside again. I was taking a walk and I decided to go live. No, I'm just kidding. This was definitely pre-planned. I have my notes, all right? All right. Happy Wednesday, everyone. I'm giving everybody some time to get on. All right. Getting my notes ready. Okay. All right. Getting everybody waiting for everybody to get on. Happy Wednesday. Hello, everybody. Hello, Anastasia, Christune. Hello, how are you, Queen? Hello. Happy Wednesday, everybody. Today we're discussing styles of investing based on your personality. All right, we're gonna get to know each other. Yeah, no, we're not. You're gonna get to know yourself and you're gonna get to be honest with yourself about your style of investing. Hello. All right, go ahead and type in, where are you ladies watching from? Ladies and gentlemen, actually. We're starting to get a lot of guys in the group. I had one guy message me like, do I need to be a woman to be in here? Well, sir, I am all about women empowerment. However, you are welcome here. So yes, I center, my business model is centered around empowering women. Yes. However, I do not exclude men. Okay. This is not a man-hating club, right? Oh God, my hands got stuck in my pocket. It's cold out here. I'm going to need my hand. Hold on. Okay. Had to get my hand. All right. Hello, everybody. Hello. Christine from New Jersey. Missy from Simmerville. Juliana, hello. Thank you for this information. I haven't even given you anything yet, love. You're welcome. Absolutely. I love doing this. Brooklyn. Okay, wait. Brooklyn, are you tagging someone or are you watching from Brooklyn? I don't know. All right. Colorado Springs. Juliana from Colorado Springs. I've never been to Colorado. I heard it's beautiful in the winter. All right. Hello. We're going to start in about 2 minutes, okay? So invite your friends to the group. Those of you, they have to be in the group to have access to the live. This is a private group for a reason, okay? There's plenty of public groups out there where you can go post anything you want, but I kept it private because I want to keep it intimate and I want to keep it scammer free. Some of these groups out there is full of scammers, full of crypto people, and you're trying to sell you left and right. Like this is not the type of party over here, okay? Some of you guys are getting mad. Why did my post get denied? I was trying to promote something free, and this is not a promoting group. Okay, we're here to educate, we're here to learn, and we're here to make some money. Not sit here and bombard a whole bunch of people with your free links, with your free this, free that, free. Listen, I give plenty of free information. I have guest speakers. I give you free stock picks. That's enough. We don't need all your little free links. Okay, please get out of your feelings about your free links getting denied. This is not that type of group. We're chill, right? We're just here to learn. We're here to make money and grow together. Not sit here and get a whole bunch of spamming all over the place with free links. Okay, all right. Now that we got that out of the way, how you guys doing today? How is everybody on this Wednesday night? You guys ready? Type in a 1 if you guys are ready to learn how to invest based on your personality. Type in a 1 if you guys are ready. Let's go. All right, so it's 8:05. I'm going to give everybody 1 more minute because everybody always comes on super duper late. And then they ask those same questions that I went over 2 seconds ago. So I like to give people time. All right, Loretta's ready. Is she the only one ready? Who else is ready? All right, some more people are coming on. All right, who's ready? All right, Claudine. Hello. Claudine is ready. Jean-Marc, always on. You're always on those lives. Okay. Awesome. So today we are discussing, if you see me looking down, guys, don't be alarmed. I'm looking at my notes so I don't ramble, okay? So today's topic, we are discussing how to pick your style of investing based on your personality. Now, why is this important? All right. There's a lot of financial gurus out there, right? I'm not the only one who does what I do, and I don't want you to only follow me either. There are people out there like Jeremy Newsom Alexander, who's actually my mentor, right? I want you guys to follow him, right? The Master Investor on Instagram. Yes, I don't even work with him, but I'm always promoting him because I trust his information. I have worked with him. I've taken his programs, and I fully trust them with you guys, right? So Keisha from Instagram, she is amazing. She's hilarious, all right? And she's a powerful black woman who's unapologetic about empowering the black community, and she's always teaching something new. So go ahead and follow her as well. But what I noticed, right? And I forgot another one, Cassandra. I forgot her last, Cassandra Cummings from Stocks and Stilettos. That is a very, very powerful group. So go ahead, check those out as well, guys. You want to diversify not only your portfolio, but you want to diversify your education as well, right? Don't just listen to Katiana. Oh, Katiana said do A, I'm going to do A. Right? Katiana said to jump, I'm going to ask how high, right? No. Katiana's a good source, right? And you love coming on her lives, and you love her webinars, you love all of that, but she should not be, she is me, right? Right? She should not be your only source of education. But what I noticed, back to the point, what I noticed is a lot of financial gurus out there, right? They give you this blanket formula, right? This one size fits all formula, and says, if you don't do this, you're not going to make any money, right? Or they give you some blanket formula that worked only for them, right? And you're over here, you're feeling bad because this blanket formula doesn't quite fit, right? It doesn't quite, it's too small, it's too tight, or it's too big, right? It doesn't quite fit. So what do I do there? I don't want to give up my latte every morning. My latte brings me peace. That's my meditation time. Do I need to give up my latte? Right? So there's no one formula for finance, right? Personal finance, everything, and especially with investing. Investing is an art. All right. Remember that investing is an art. If you're going to learn from someone, all right, and they're telling you this is the only formula, and if you don't follow it, you're not going to be successful, you need to unfollow that person. All right. You want to follow someone who understands that investing is an art, number one. All right. And that personal finance is not a one size fits all. Everybody's different. I get calls from you guys. Some of you guys are looking to save for your first house. Right? Do you think that someone who's saving for their first house, do you think their investing style is going to be the same as someone who's ready to retire in the next 2 years? Right? Or what if someone has 20 years to retire? Are they going to have the same investment style as someone who has 40 years to retire? Right? Is someone who's looking for a passive income. They're looking to make an extra $5,000 every quarter, right? And they have $100,000 in their portfolio. Do you think that they're going to invest the same way that someone who has $5,000 in their portfolio? Absolutely not, right? So you need to understand your situation. Where are you? What are your goals? What is your personality? And then find the blanket that fits you. Find the color that makes you comfortable. Find the thickness that makes you comfortable, right? Find the softness of the blanket. Do you want like a plushy one, like those big blankets that you just throw over your bed and it's nice and fluffy and you lay on the bed and it's nice and soft? Or do you want one of those blankets that you could carry on the couch, right? Everybody is different. Okay. Same with picking a car, same with picking your clothes, same with picking your earrings, right? There is no one size fits all. All right. So what I'm going to give you today is a skeleton. Okay, we're going to discuss a skeleton that's going to allow you to find the answers for yourself. Again, I am your GPS. I am here to guide you. I'm not here to do all the work for you. Okay, so those of you, let me see any comments. All right, everybody's ready. Okay, so the first step to figuring out what type of investing style is right for you. What do you guys think it is? Actually, I'm gonna let you hold on for a second. All right, we're gonna build up some anticipation. What do you guys think? Let's go in the comments. What do you guys think is the first step to understanding your personality and your investing style? What is the first step? What do you guys think? I'm gonna give you guys about 30 seconds to talk in the comments here. All right, what do you think is the first step to understanding your style of investing? What is the first step? I'm going to wait. There's a lag, guys. So if you're typing, trust me, I'm going to see it in about 2 seconds, 30 seconds. I don't know. All right. Do, 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 do. Know yourself. Yes, Claudine. Find out what I use. Okay, interesting. I like that. Your why. There you go, Stephanie. You're cheating. Your why. You've taken my courses before, you know, right? Budget. Absolutely. Get educated. Why? Yes, Marie. Absolutely. Know your interests. Absolutely. Hello, mommy. I see you here, right? So the first step, as Stephanie mentioned, right, is why. Determine your why. Exactly, Claudine. Know your goal, right? Yes, the budget is important, but the first step is to understand your why. Now, not just a, hey, I want to make more money. Okay. I'm pretty sure everybody in here, right, is in this group to make more money, right? Can I get a 1? If you're in here to make more money, type in a 1. If you're not in here to make more money and you're here to be a spectator, go ahead and type in a 0. It's okay. There's no shame. There's a lot of spectators in the group here. There's a lot of you guys who watch every single one of my lives, who comment on every single post, right? Watch every single webinar, show up to everything, but haven't even bought a stock yet or bought anything. And that's okay. There's no shame. But type in a 1 if you're here to make more money. All right. Type in a 1 if you're here to build generational wealth. All right. Type in a 1 if you're here to build retirement. Right. Type in a 1 if you're here to save for your child's education. Right. A lot of you guys are typing 1. You're here to make more money. All right. So if I tell you guys, if I say, hey guys, there's about 35 of you on right now live. Okay. If I say, hey guys, let's all go visit my mom. She's watching. Hey, mommy. Right. If I say, hey, we're going to go visit my mom in Florida. All right. And I come and pick all of you guys up. Right. And we put GPS if we put Florida into the GPS to go see my mom, are we going to get to my mother's house? Okay. I'm going to repeat that. All right. If I come and pick all of you guys up, I get a whole bus and we're on our way to go visit my mother in Florida. Okay. And we only put Florida into the GPS. Are we going to get to my mother's house? Okay, go ahead. This is going to be very interactive, guys. All right, so I know there's a lag, so I got to give you time to answer. Are we going to get to my mom's house? Christine said yes. Okay, does everybody agree with Christine? If I put in the GPS, Florida, Loretta says no. All right, Christine changed her answer. She said no. Juliana said no. Why is that? Okay, why won't we get to my mom's house if all I put in the GPS is Florida? What is the problem? You need to enter the whole address. Okay? All right, I'm going to repeat that. In order to go visit my mom, all of us, we're all going to go see my mom because she's cooking. Mommy, you cooking? All right? And we're going to go visit her. I need my mother's address. All right. So it's the same thing with your finances. A lot of you guys get on the calls with me and you're telling me, yeah, I want to make more money. Okay. Is more money $1? Because $1 is more money than you started with, right? Is more money $5? Because $5 is more money than you started with, right? Is more money $5,000? And how often is this more money? Are you looking for extra yearly income? Are you looking to just build a nest egg for retirement? Right? Are you looking for residual income, quarterly income, monthly income, bi-weekly income, weekly income, daily income? What exactly are you looking for? Right? Physical address is needed. You need more details. So I want you guys to answer this, right? So when you guys tell me you're here to build generational wealth, right? You're here to make more money. You're here to build for retirement. What does that look like? What is the exact number? And it's okay if you don't have an exact number. All right. It's okay. Don't be ashamed, because I didn't have an exact number for a very long time. And I was getting eaten alive by the market because I had no sense of direction. I didn't know if I should go left, if I should go right, because I did not have a destination. Right? And so when I started to determine my destination, when I decided that, okay, because I started with $2,000, okay? When I first started trading almost 10 years ago, I can't wait to be able to say 10 years, but soon come, right? When I started trading almost 10 years ago, my goal was to turn $2,000 into $10,000. That was my goal. Guess what? I did it in 3 weeks, okay? And then once I turned that 2000, I was very aggressive. All right. I do not teach how to do that anymore because I was doing some crazy stuff. All right. It's things that I do not teach. Those things, luck is not duplicatable. You guys are out there, you're making a lot of money. That's luck. Okay. That's not strategy. I can't teach you luck. Okay. So don't come in here and say, hey, Kat, can you teach me how to take $2,000 and turn it to 10 grand? No, I'm not going to do that. I could teach you how to take 10 grand and turn it to 25 grand. Yes, I could do that very easily. But yeah, anyways, that's besides the point. Right. So that was my goal. Then my next goal was saying, hey, I want to become a day trader. And the minimum amount you needed at the time for a TD Ameritrade to be a day trader without having any restrictions on how many trades you can do per week and so on and so forth was $25,000. And so guess what? That was my next goal. Right? And so on and so forth. So you want to have your address. So take a moment and think about, what is your address? Those of you out there who are planning for retirement, what does retirement look like for you? Right? What do you want to do at retirement? Right? Are you going to be taking care of grandchildren? Right? Are you going to be one of those like ladies who's in the community, always volunteering, always giving away stuff, always like contributing to charity? Right? Are you one of those ladies who's traveling the world? Right? Every single day or every single month you're somewhere new? Or do you just want to go to bingo night and kind of chill and knit all day long? Right? What does your retirement look like? What type of lifestyle do you want to have at retirement? All right. Or whenever your goal is. Maybe your goal is to fire your boss in the next, I don't know, in the next 5 years. I don't know, in the next year, in the next 2 years, whatever. What is the lifestyle? What does the goal look like? All right. Paint that picture. Right? Write it down in a journal, or even paint it if you really want to. Those of you who are artists out there, go ahead and paint it. What does that look like? Those of you who want to buy a house, right? If your goal is to buy a house in the next 2 years or in the next year, what type of house do you want? Is it going to be an income property like a duplex or a multifamily home? Is it going to be an apartment building? Is it going to be here in the United States, or is it going to be in Ghana, right? Or is it going to be in Haiti, right? Or is it going to be not in Florida but somewhere in Kentucky? I don't know. How much is that going to cost is the next question you want to ask yourself, right? We're still on number 1, by the way. We're still on your why, but we're getting specific. We're getting to the address. Okay. So paint that picture. What does your retirement look like? So those of you saving for your kids' college, right? For the kids' college, how much do you want to contribute to your kids' college? How much is college going to cost? What if your child doesn't even want to go to college? What if they want to open a business, right? What if they want to take a year off like the Obamas did, the kids of Obama? They took a whole year off and went traveling for a whole year. What if that's what they want to do? How much is that going to cost? How much is Harvard going to cost? How much is FIU going to cost? How much is FAU, BCC, whatever your child, right, is going to do? How much is that? If you want them to have the freedom to go to Harvard if they want to, how much does Harvard cost? Okay, Harvard costs $30,000 a year. You need 4 years, you need $120K. Bam, that's your address. All right. I want to live comfortably, Katiana. All I need is $5,000 a month. All right, $5,000 a month. I think it's about 60. Is that 60? Yeah, I'm trying to do math in my head here. About 60 grand a year. Okay, bam. I need to make 60 grand a year for the rest of my life at retirement. That's your address, right? Let's say your goal is to buy your first income property, and there's a duplex that you've been eyeing right there in Fort Lauderdale, right there on State Road 84, and you looked up the price is $300,000, and you need 10% down, or you need 20% down. All right, 20% of 300,000 is what, 60,000? Yeah, 20 times 3. Yeah, 60,000, right? So, bam, that's your address, 60,000. When do I need it by? I want to have my first income property in the next 3 years. Bam. I need to make $60,000 to put down on that duplex right there in Fort Lauderdale or somewhere in Fort Lauderdale. And I need $60,000 to put down on it. All right. Or I need $70,000. Or I need $100,000, 60,000 to put down in it, and then another 40 grand to fix it up. Right? Be specific with your goals. All right. Any questions on number 1? Type in a 1 if you guys understand number 1. Number 1 is your why. All right. My address is to own enough real estate that I make money while I sleep. Okay. Beautiful, Christine. Let's actually dissect that. Right? How much money would you need? All right. Okay. How much money would you like to make in your sleep? Because you can make $1 in your sleep. right? I sell courses all day long. I sell that same course that I did in December. Every single day somebody buys that course. I wake up every single morning and it says, hey, you have sold 5 units today. You've sold 20 units today. I make money in my sleep, right? But is that enough? How much money in your sleep do you want to make? Are you looking to make $1,000 in your sleep? 2,000, because you can make $1 in your sleep. You can make 60 cents in your sleep. You can make a penny in your sleep. What exactly, how much money in your sleep are you looking to make? All right. Are you guys picking up what I'm putting down? Are you picking up what I'm putting down? Type in a 1 if you're picking up what I'm putting down. All right. So that's pretty much it. I want to make at least $30,000 a month, tax free. Bam. That is an address, Christine. There you go. Now we have an address. Okay, so now we know exactly where we're headed. So anytime the GPS says turn left or turn right, get off because there's traffic, right? You're still headed to your destination. Okay, so your destination needs to be as specific as possible. How much money exactly is are my goals going to cost? Okay, all right, so that is the first question. How long have I been talking? Okay, so we started about 10 minutes. Okay, good. I don't want this to be too long. All right, cool. So the next one we're going to do, the next question, let me not lose myself here. All right, number 2 is your risk tolerance, okay? Now, let's be honest. I know you guys want to make this money. You want to make it quick, right? I'm sure Christine would love to make $30,000 in her sleep today, all right, or yesterday. Right? She wants it as fast as possible. But we have to be very realistic with your goals. Now, does that mean you're gonna what's the word I'm looking for? Like you have to minimize your dreams? No. You don't want to minimize your dreams to match your reality. No. You want to elevate your reality to match your dreams, all right? I'm not telling you that, making $30,000 tomorrow is impossible, because it's not. If Christine really does the spiritual work and she unblocks every money block that she has from past lives and from childhood and everything, trust me, she will make $30,000 tomorrow. That is very, very, very possible, right? So I'm not here to damper on your dreams, right? I'm not here to tell you, slow down. That's not realistic. Because a lot of people told me a lot of things that I've done this past year were not realistic. And here I am today. I started this business 2.5 months ago. Okay? I restarted the business 2.5 months ago, because people were doubting me. And I didn't doubt myself. I believed in myself, despite what other people had to tell me, right? There's a lot of people who did not believe in me. But I decided that I was going to take on this business and decide my own fate. So I'm not here to damper your dreams, right? We're not here to damper the dreams. We're here to elevate our current reality to match our dreams. But in order to do that, we must understand the reality that we're here today. Do you guys understand that? So when I say, you want to be realistic, I'm not saying, dream on. You're not going to make that type of money. That's never going to happen. That's not what I'm saying. I'm saying be realistic about where you are today and the type of work that you have to do to get to your dreams. Type in a 1 if you guys understand that. Type in a 1 if you guys understand that. Type in a 1, all right? So when I say be realistic, all right, because I know a lot of you guys are going to say, well, Katiana, blah, 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 blah. Listen to what I'm saying, because a lot of you guys don't listen when I'm talking on these lives. You hear what you want to hear, okay? What I'm saying is when I say be realistic is to understand where you are now so that you can elevate your current reality to match your dreams, okay? So when I say risk tolerance, be realistic with your risk tolerance. Be honest with yourself. Don't say, well, I wish I could take on more risk. Or wait, what do you mean, Katiana? I mean, I want to make $30,000 in my sleep, right? I guess I should be risky. No. Not what you should be. What are you really? All right? Take a moment and think about that. What is your real risk tolerance? Not what you think it should be, not what you wish it would be, not what Katiana's risk tolerance is, right? Not what Stephanie's risk tolerance is, not what LaShawn's risk tolerance is. What is your risk tolerance? Are you very aggressive where you love to gamble? Yeah. Take me to Vegas, baby. I'm dropping hundreds everywhere. More risk, more reward, baby. Is that you? Okay. Are you you're aggressive, but you're not like Vegas aggressive. Like, okay, you could tone it down. I'm going to sit down at the poker table and I'm going to get up after an hour. Or when I double my money, I'm going to get up. But you're still taking on that little risk, right? Is that you? Are you very aggressive? Are you more aggressive? Are you moderate? Are you like, okay, Listen, everyone, I know that it takes money to make money, but one thing I'm not going to do is gamble with my money. So I'm going to put in the amount of money that I'm willing to lose, right? Is that you? All right. Are you more conservative? Are you like, you know, you guys are out there with your Teslas and your Neos and your plugs. That's all. But I'm going to stick to my blue chip stocks. I'm going to stick to my Disneys. They've been good to me. I'm going to stick to my, what's the other one? IBMs, right? I'm going to stick to my Apple, right? It's not a crazy roller coaster all over the place. 1 minute it's up 100 points, then it's down 100 points, right? That's not for me. I'll stick to the big boys that have been around for a while. Or are you like, listen, I don't know what you guys are doing, but I don't even want to lose a dollar. Okay, I'm trying to make money in my sleep, not lose money in my sleep. All right. So go ahead, write in your comments. What is your real risk tolerance, right? What is your realistic risk tolerance? Not what you want it to be, not what you think it should be, but what it actually is. Me? Listen, I am a risk taker. I take on risk. I fall down. I get up. I have bruises all over and I get back up. I'm bleeding, right? I'm dying and I get back up and I go back in. I'm taking on all the risk, baby. I'm risk. That's why I turned my $2,000 into $10,000 in less than 3 weeks, right? Because I was risk, baby, give it to me. That was my personality. It still kind of is. It still kind of is. I think I went from very aggressive to more aggressive, but I'm definitely not moderate. No. I don't do safe. All right. Safe is for the boring people. No, I'm just kidding, guys. Okay. Not too aggressive because I have a lot to lose and not much time to rebound. There you go. Exactly, right? That's your realistic. Vegas, baby. That's right, Claudine. You're with me. We're sitting at the poker table and double or nothing, baby, right? All right, be a realistic. What are some aggressive? Michelle says aggressive. Okay, so you're not very aggressive, but you're aggressive enough. You understand that more risk equals more reward, but you're not going to sit here and bet your entire portfolio on one trade. A lot of people do that, and a lot of people was me. I literally put my entire portfolio on one trade for Netflix. Oh, I will never forget that Netflix trade. That Netflix trade humbled me. I was positive that Netflix, this was back in 2014, I think. Netflix was like this was back when Netflix was like $100. It wasn't even $100. And our earnings was coming out and I knew Netflix was going to have amazing earnings. And it did. It had amazing earnings. But guess what happened to the stock? It completely dropped. There went my entire portfolio went to zero because I was so sure on Netflix and I bet all of my portfolio on one. I went double or nothing and I lost my entire. That was the first time I had ever done something like that. Okay. That's what happens when you're very aggressive. So be realistic with that, right? All right. Any questions? More conservatives as I continue to learn. Okay. Awesome. So conservative, we already know. So you're being realistic. Any questions on number one? Number one was your why, and we want the why to be as specific as possible. We want to have an address. Okay. We want to have an address. Number two, we want to be realistic about where we are now. Not because I'm trying to tone down your dreams, but we want to see where we are now and elevate our reality in order to match our dreams. All right? Are you guys with me so far? Type in a 1 if you're with me. Any questions on the first two? Any questions before I move on? All right. We're going to get to number 3. Okay? Any questions? I'm going to give you guys about 30 seconds to ask any questions because there's a lag. Any questions? Let's see. Oh, my hand keeps getting stuck in my pocket. Oh my gosh. Okay, I got it out. All right, no questions. Okay, all right, cool. Oh wait, not aggressive at all. I inherited a 7-figure life insurance benefit. Now I just sit in REITs. There you go. Perfect. That is absolute. Thank you for bringing that up because I wasn't going to bring up REITs today, but I'm going to talk about it today. Okay. Awesome. That's what I'm talking about. You understand where you are. You understand that you have a 7-figure portfolio. You don't need to grow it. You've already got it. Now it's time to protect it. All right. So the third question you want to ask yourself, right, is are you this is actually leads me to the next question. Are you creating wealth or are you protecting wealth? Okay, I'm gonna repeat that. You want to ask yourself, are you creating wealth or are you protecting wealth? What does that mean, Katiana? Everybody here is creating the wealth. No. Not everybody's here is in the process of creating wealth, right? There are some people in here like who is that? LaSalle, who has 7 figures already, and he's here to protect it. All right. Not everybody here needs to be aggressive and needs to make money and this and that, and is desperate or needs to grow this money because blah, 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 blah. Not everybody is like that. Not everybody. Okay. Okay. So there are people. So think about your goals, right? Some of your goals are retirement. Some of your goals are college savings, right? Some of your goals is down payment on your first duplex or your first apartment building, right? As you get closer to that goal, is it time to create more wealth and continue to be aggressive, or is it time to slow down and protect it? Right? What do you guys think? As you reach that goal, as you get closer to that goal, that retirement, let's say you need $1.5 million for retirement in order to have money for the rest of your life, right? When you start hitting $1 million, $1.2 million, is that the time to be super aggressive or even aggressive? Or is that the time to be more conservative and make sure that you protect all of the work that you've done so far, right? So where are you right now? Are you in the creating wealth stage, or are you in the protecting wealth stage? Okay, so some of you guys, you just need 10 grand to put down on your first house, and you're already at 8 grand, right? Is that the time to be aggressive and gamble on stocks like NEO and Tesla and Plug and everything? Or is that the time to protect that 8 grand that you worked so hard for, right? So you want to be realistic at where you are. Again, we're looking at where are we today to elevate, to get to the reality that we need to be to reach our goals. Are you creating wealth, or are you protecting wealth? Okay, so that's the next question. You're creating. So a lot of you guys are still in the creating. All right, it looks like one person, too much money in the pocket. Replay, I'm at work. Okay, no worries. All right, not aggressive at all. Okay, so LaSalle is probably the only one here who's in protect. There are some of you guys who are sitting on about, I spoke to someone who has about $500,000 in her portfolio, and she's about ready to retire. She wants to know how much, how can she make that work for her to continue to live off of that for the rest of her life, right? At that point, she is not creating wealth. She is protecting wealth, right? She is making sure that that $500,000 stays put, doesn't go anywhere. Yes, it can grow, but it doesn't need to grow aggressively, because if it grows aggressively, that means she's exposing herself to more risk, right? And so if things go wrong, that $500,000 can easily go down to $200,000 very quickly, right? So she's more conservative. So she's more protecting wealth, okay? So any questions on 1, 2, and 3? 1 is figure out the address. Where exactly am I headed? What does my retirement look like? What does my kids' college savings look like? What type of college are they going to? How much does it cost? How much is that down payment going to cost, right? That's number 1. Number 2 was your risk tolerance. Are you very aggressive, moderate, conservative, or very conservative, right? Number 3 is, are you creating wealth, or are you protecting wealth? All right. So that's pretty much, that's the first 3. Okay. So question number 4, you want to be realistic with the amount of time that you have to manage a portfolio. All right. How much time do you actually have to sit here and look at charts all day long? How much time do you actually have to read Reddit posts all day long? How much time do you have to watch Katiana's lives every single Monday, Wednesday, and Friday? How much time do you have to watch YouTube videos for 2-3 hours and in a day, right? How much time do you have to look at a company's balance sheet statement? How much time do you have to look at the company's income statement? How much time do you have to actually look at, has the company made cash flow quarter to quarter to quarter? Right? How much time do you have to look if the company has more debt than it has more assets? How much time do you actually have to do all of this? How much time do you have to keep up with new opportunities in the market? Right? How much time do you actually have? Some of you guys have all the time in the world. I used to have all the time in the world, but now I have a whole business. I have a list of clients, right? I have phone calls to make, and I have to manage my portfolio. I don't have the time to sit here and look at stocks all day long and look at charts all day long. So you think my style of investing has changed? Absolutely. Right? Another thing I'm going to mention is that once you choose your style of investing, don't think that you have to stick to this for the rest of your life. Your life changes, right? A new baby comes in your life. You get married. You have a new house. If your goal is to get a duplex, right? So you were creating wealth to get your duplex. Now you finally have your duplex. Now it's time to clean it up and renovate it so that you can rent it out. Right? Do you have the same time that you had before you had the duplex? No. So you have to be realistic. How much time do you actually have? A lot of you guys start with me because my programs, actually I shortened my programs. My programs used to be 3 months, but now they're 2 months, okay? Because I realized a lot happens in 3 months. The people's situations change in 3 months, right? So a lot of you guys in the beginning, you had all the time in the world, but then all of a sudden work schedule changed and you have no time, kids are sick and this and that, right? So things happen. Be realistic. How much time do you have to dedicate to managing your portfolio? And this, once you answer that question, now you're going to decide, am I going to actively manage my portfolio or am I going to passively manage my portfolio? All right. Am I going to do strategies that give me active income? Meaning I actively have to go out there and look for opportunities, buy stocks, hold on, all of that, make decisions, all of that. Right? Or am I going to just buy a stock and just passively get that income? Right? Just get it every single quarter, every single month. I know that I'm making this amount of money. Everything's on autopilot. Right? Be realistic with your time on that. Okay. So a lot of you guys just hopped on. Cassandra, Travis, you made it. All right. So a lot of you guys just hopped on. The first question is why, and you want to be as specific as possible. The second question is your risk tolerance, right? Are you aggressive, moderate, or are you conservative? The third question is, am I creating wealth or am I protecting it? The same strategies that you did to get to $1 million are not the same strategies you're gonna use when you have $1 million. You're gonna have to switch your strategies and protect that $1 million. There's no sense of working hard for the next couple of years, building up multiple 6-figure, multiple 7-figure portfolio, and then just to go turn around and lose it all. Right? That would have been all for nothing. So you want to switch your strategy. Am I creating wealth or am I protecting wealth? Be realistic with your time. Number 4, right? Be realistic. How much time do I have? Do I have a new baby? Before, I probably had a lot of time to sit here and look at stocks and charts all day long and sit in front of the computer and be glued to the screen all day long. But now I have a baby crying in the background. I don't have that type of time anymore. Right? So be realistic. Any questions on the first 4? Any questions on the first 4 questions? Any questions? Let's see. All right, we're about 30 minutes. Okay, good. Any questions? Both active and passive. Okay, beautiful. Creating. Okay. All right, any questions? I don't see any questions. So I'm going to move on. The last question you want to ask yourself, right? Based on all those first questions, do you want your portfolio managed for you or do you want to do this on your own? And be realistic. There is no shame in giving your money to someone and having them do all the work and you decide your goal. You're already going to tell them your goal and you're going to be as specific as possible, right? You're already going to tell them your risk tolerance, all right? And you're already going to tell them if you want active strategies or passive income, right? You're already going to tell them all that. So there's no shame in having someone else do it for you, right? Decide. Or maybe you want a combination of both. I used to be one of those people. I'm not going to lie to you. I used to be one of those people like I would never have one of those white boys on Wall Street handle my portfolio. Okay. I could do this myself until reality hit me and I realized I'm running a multiple 6-figure business right now. I don't have the time to sit here and watch charts all day long. So yeah, it may not be a white boy on Wall Street, but it'll be some black woman on Wall Street or some black guy on Wall Street who's going to manage my portfolio for me. Have that talk with yourself. Right? Go meditate on it. Go pray on it. Sit down and say, do I really want to do this? Right? Be realistic. Because a lot of you guys say, yeah, man, I can't wait to start buying stocks. I'm going to make so much money. And then life happens. And next thing you know, your portfolio is sitting exactly where it was 10 months ago, 12 months ago, a year ago, 2 years ago. And nothing has changed. Okay? Most investors, all right, actually make way more money when they have a managed portfolio. Okay, I have Sharika Ralliford, who is one of the moderators in the group, right? She actually manages portfolios. You need a minimum of $10,000 to have your portfolio managed by her firm. Most other firms, you need a minimum of $250,000 to have it actively managed. But you don't have to have it actively managed by a real life person, right? You could do things like ETFs, mutual funds. Okay, you can have robo-advisors. You can have targeted funds, right? These are all, you can find them on Vanguard, right? Go to investor.vanguard.com. I talk about this all the time. Investor.vanguard.com. Take a look at their mutual funds. They have targeted funds for, let's say you want to retire in 10 years, right? You literally pick that fund and you put it on autopilot. Every single 2 weeks, they automatically grab the money out of your paycheck and it's done for you. 10 years later, you're retired, right? Or 20 years later, you're retired. Right? Be realistic. Do you want this to be automated? Right? Do you want this to be passive? Okay. Awesome. All right. So here's a strategy for you if you're going to do passive income. If you don't want to actively manage your portfolio, if you're saying, listen, Kat, I was with you up until you talked about time. I ain't got the time for this. I don't want to do this. I don't want to do this all day long. I have a life, right? So to think about dollar cost averaging. What does that mean? Decide a budget, right, that you're going to use every single month strictly for investing. No matter what's going on in the market, no matter what's going on with Tesla, no matter what's going on with Apple, no matter what's going on with IBM, PayPal, anything, right? You decide, hey, every 2 weeks I'm going to invest $300, or every 2 weeks I'm going to invest 100 or 200 or 1,000, 5,000. Right? Because you got to start with your goal and you got to be realistic. Where am I now? How far am I from this goal? Right? So if your goal is to make $60,000 in the next 3 years and you're only starting with 2,000, you're going to need to dump a lot of money into that fund in order to get to your 60,000. So be realistic about where you are now. Right? Don't lie to yourself and say, oh yeah, I'm going to buy some stock and I'm going to do like AMC and GameStop and make a whole lot of money in a few days. No, that doesn't always happen all the time. That is pure luck, guys. That is not strategy. Okay. If you invest like that, if you continue to chase the next big jump, the next big win, guess what? You're going to find yourself the next big loss over and over and over. Trust me. Okay. And a lot of you traders in here who've been trading know exactly what I'm talking about. It's the beginners out there who's only been trading for less than a year that think they're invincible. And I'm not here to bust your bubble. Remember what I said. I'm not here to bust your bubble, right? You determine your reality. But a lot of you guys in here have not undergone a market crash yet. You got in after the market crash. You don't know how to recover from a market crash, right? So you want to be realistic. How far am I from my goal? Right? And then when you're dollar cost averaging, how much do I need to put into my portfolio every single month and have this passively managed for me, whether it's a robo-advisor, whether it's an ETF, whether it's a mutual fund. So for example, let's say you want to do one of the ARK ETFs out there, ARKK, ARKQ, whichever one, right? And most of them are averaging about 100% return. One of them average about 180% return, right? So basically what does that mean? That means if you put in 10 grand last year, okay, you made 100% of your money. So you double that. Now you're at 20 grand. So if your goal is very short, that might be the right ETF for you. You want an aggressive ETF like that, but you don't have to do the whole 10 grand at once. You could have just done $1,000 every month and you would have had 12 grand. Right? Or you could have done $500 every month and so on and so forth. You don't have to do it all at once. Don't get scared now. Okay? You could do this. You got this. Trust me, we all got this. Okay? So take a look at these. Look at the ETFs out there. Look at the mutual funds. What is the yearly return? How much money do you have to put in to get to your goals? And dollar cost average it, right? When you're budgeting, half of you guys are spending money on Amazon and food and Uber Eats and Postmates and all of that anyway. So why not budget yourself? Look at your budgets, your statements, and decide how much money am I going to put away every single month to invest, whether it's through an ETF, a mutual fund, or a specific stock. Right? Maybe you decide on one stock or two stocks. Maybe you decide that every single month you're going to buy $500 worth of Apple stocks. And you're just going to close your eyes and just let it do its thing. Because you believe in the company, you know, in the next 10, 20 years, Apple's going to go places. Right? Maybe you decide that you're going to put in a $500 into Tesla. You're not going to get a whole share of Tesla because Tesla's $800 and something, but you're dollar cost averaging into Tesla. And eventually you're building those shares. You're building that ownership every single month, every single year. Now, 3 years later, 10 years later, you're looking at thousands of shares, right? And guess what? You're also looking at compound interest, right? Compound interest loves time. When you compound a penny over 30 days, guess how much money you have at the end of 30 days? You have $5 million. What does compounding mean, Katiana? It means interest on interest. Okay. So year one, let's say you start with 10 grand, right? You make 100% return. Okay. Year two, on that 100%, you make another 100%. So let's say now you're at 20 grand. So now your portfolio is 20 grand. Then you make another 100%. Now you're at 40 grand, right? Year three, you make another 100%, right? What's 4 times 2, right? 80, now you're at 80 grand and so on and so forth. You can see the power of compound interest. When you start going into the high numbers, right? By year 7, year 9, you're looking at multiple 6-figure, multiple 7-figure portfolios. Easy. And all you did was put in $500 every single month into an ETF. You weren't sitting here watching, stocks go up and down, ride that roller coaster, make a lot of money, lose a lot of money, make a lot of money, lose a lot of money, make a lot of money, and really not go anywhere. You just put in $500 and you closed your eyes. All right. Same thing with Tesla, right? If you got Tesla, when they split last year, I got in at 356. 356. Tesla's at $800 and something. Imagine if you're doing that every single month. Every single month, you close your eyes. Tesla's down 100 points. Get $500 anyway, because you believe in the company. All right. How many of you guys understand picking up what I'm putting down here? Type in a 1 if you understand. Okay. Type in a 1 if you understand. All right. So the questions you want to ask yourself is why. Number 1 is why. Number 2 is what is your risk tolerance. Number 3 is, are you creating wealth or are you protecting wealth? Number 4 is, what was number 4? Oh yeah. How much time do you actually have, right? And number 5 is be realistic with, do you want this done for you? Do you want to do this passively and kind of just buy ETFs and index funds and, and targeted funds all day long and just dollar cost average your way to your goals? Or do you want to actively sit there and analyze stock charts and financial statements all day? Okay. All right. Cool beans. So now let's talk about trading versus investing. All right. So I want to hear from you guys. I've been talking too long. Okay. So what is the difference between trading and investing? What is the difference between trading and investing? All right. Let me see if there's any questions. No questions. Okay. Both active and passive. Okay. No questions. All right. So you guys are understanding. You guys are usually bombard me with questions. I must be very clear with my message tonight. There's no questions. Or I'm just giving you so much information and you're over here trying to process it all. So you don't have time. You haven't thought of questions yet. So it's one of them, right? All right. So what is the difference between trading and investing? What is the difference between trading and investing? All right. I'm going to wait for you guys. Let's see if you guys can answer that. Do, 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 do. You guys are probably wondering, why is she outside? Because around this time, AT&T decides, I don't know what's going on with the internets, but every time around this time, my internet drastically slows down. And I don't know if it's because everybody's watching Netflix or what's going on, but I'm here outside. Okay, trading involves fluid money moves. Okay, interesting. Okay, investing is holding stocks for long terms. Yes, LaShawn, absolutely right? Anybody else want to take a crack at it? Okay, so trading is more short term. Just to put it all into layman terms for everybody, trading is more short term. You're trying to catch the highs and the lows of the stock, or the ETF, or the mutual fund, or the bond, or the futures, or the option, whatever it is you're trading. Okay, well, whatever it is, you're just trying to catch the lows and the highs. You're not concerned with the value of the company. You're not concerned with the vision of the company. You're not concerned who's the CEO. You're not concerned, have they been profitable for the last 4 quarters? You're not concerned about growth rate. You're not concerned about cash flow. You're not concerned about any of that. You're just trying to catch the lows and the highs, right? A lot of you guys out there, you think you're investing, but you're not investing. You're trading. Okay, so those of you who participated in the AMC and the AMC, what was the other one? GameStop pump and dump. That's pure trading. Okay, those companies are worthless right now. Okay, and if you just got in and out, you traded, and there's nothing wrong with that. Okay, I'm not bashing you because I trade. Trust me, I love to trade. Remember, I'm a risk lover. I'm a trader. I just don't have the time that I used to really do it the way I used to. But that is trading. Don't tell yourself you're investing, because you're not. Okay, that is trading, and it is the most risky type of investing, quote quote. It's not really investing, but it's very risky. So when we answered number 2, okay, and if you said you're not you're more moderate, and you're trading, then you're not aligned, right? What you say you are, your personality, and what you're actually doing is not aligned, and that's probably why you're struggling. Right? That's probably why your portfolio probably hasn't moved. And I'm only able to say that because I was you. There's no shame in it. I remember for a whole year, my portfolio I looked at my statements, my 1099, and I was like, holy crap. I made a lot of money it felt like I made a lot of money throughout the year. But when I looked at my 1099, I literally, like, my profit and loss for the year at the time, this was back when I was in my rookie days, right? My profit and loss was actually negative 2,000. Now, I didn't lose like a whole lot of money, but I'm like, I could have sworn I made more money than that. I was traveling all over the place. I was eating out all over the place, right? That's because I was not managing. I was trading. I was not investing. I didn't have that investor mentality. I didn't have that ownership mentality. I was getting in and out, in and out, in and out, catching the high, catching the low, catching the low, catching the high, roller coaster, right? So be realistic. If your goal is retirement, okay, and you have 20 years to retire, right? And you're telling yourself that you're moderate and you're not very aggressive and you're trying to catch the lows and the highs of something like AMC and GameStop, you're not aligned, right? So find a strategy that is aligned with what it is that you actually want. All right. Type in a 1 if that makes sense. Type in a 1 if that makes sense. So with trading, you have day trading and you have swing trading. So day trading, you're getting in and out of a trade within a day. Okay. Sometimes you can hold on overnight, but most of the time it's about a day. Swing trading, anything more than a day. So you're looking at a couple of weeks, a couple of months, right? Typically you're getting out within less than a year with swing trading. Okay. So day trading, you're getting in and out during the day. You might hold on overnight, right? And in swing trading, you're holding on for a week, 2 weeks, a couple of months, but typically less than a year. Okay. So that's day trading versus swing trading. Now let's talk about investing. All right. So investing is when you have that hat on, right? That I'm going to be an owner in the company. Right? I am buying shares because remember what a stock is. A stock is ownership in the company. Do you want to own 0.0000001% of a company, or do you want to own 2% of Tesla? Do you want 0.00001% of Tesla or 5% of Tesla? Right? So the more shares you have, the more ownership you have in the company, right? So the more shares you have, the more ownership. So if you're an investor and you believe in the company, don't you want more shares? Don't you want more ownership? Right? So the goal should be 10,000 shares. Katiana, 10,000 shares. Tesla's $800. How am I going to get 10,000 shares? Dollar cost average your way there. It might take you a couple of years. What's the rush? You're investing for retirement. Remember, you're investing for your child who you want them to be able to go to Harvard if they want to, right? Or they want them to be able to take a year off and go travel for a whole year if they want to, right? Remember your why. This is why we started with the why, right? That's going to shape your mindset. Because investing is a mindset, guys. It is not strategies. You guys love when I come on here and I give you strategies and this and that, and you get on the calls and you tell me, well, what about this? What about that? The mindset is where you need to start. This controls everything. The spirit controls everything. Now, we're not in church here. I'm not going to sit here and preach to you, but it has to start with the mind, with the spirit. You have to be aligned with your goals. You can't say you want this, but you're doing that. Right? If you have $100,000 and your goal is to make that work for you for the rest of your life, your strategies need to be aligned with that. Right? Okay. So that's what was the point of that? Okay. There's a reason why I brought that up. So day trading. Oh, investing. We were talking about investing. Sorry, I tend to ramble. Okay, awesome. So we're going to briefly go over the different types of investing, and then we're going to wrap up with the different types of financial markets. So different types of investing. We have income investing. So income investing, you're just buying stocks because of dividends, right? You decide, hey, I'm not concerned with what's going on with this company. I know this company has been around forever. So, something like McDonald's, and you know McDonald's, it's been around forever and ever. It's going to take a lot for it to go down, right? And they pay $5 a share per dividends. So so if I want to make an extra $500 every single quarter, how many shares of McDonald's do I need if they pay $500 a share in dividends? Actually, I'm going to ask you guys that. If McDonald's pays $5 per share in dividends every quarter, and I want to make $500 extra passively in my sleep without having to think, without having to pick the right stock, or without having to buy the dip and catch it at the right price and everything. I just want to passively make $500 every quarter. How many shares of McDonald's do I need to own if they pay $5 per share? All right, I'm going to let you guys answer that. Let's say a company X, Y, and Z pays, $7 per share, right? And you want to make $700 every quarter. Passively, without thinking, right? How many exactly, Tony? Absolutely, 100 shares of McDonald's. Now, 100 shares of McDonald's is going to cost you a pretty penny. So you can find a company that's a little bit cheaper that's still giving you those nice dividends, like a REIT, a real estate investment trust. Okay, that's very cheap. Those are really cheap, and they have to pay you dividends. So usually those dividends are really high. All right. So, for example, one of the REITs out there, they pay about $1 per share, but they trade at $17 per share. So to make that same $500 that you would with McDonald's would cost you a lot less with that $17 REIT than it would that $200 McDonald's stock. All right, so you want to take a look at those. Another type of investing is called value investing. So you're finding the best bang for your buck. You're finding the company that has the most value, but it's on sale. Basically, right? You're looking at the financial statements. You're saying, "Oh my God, this company is healthy. Why is it so cheap? Let me buy 100 shares. Let me buy 200 shares." Right? You're finding the best bang for your buck. Number 3 is growth investing. So you're not concerned with the value. You're not concerned with dividends. You want to see how fast is this company growing, like a Tesla, like a Neo, like a Plug. Right? Those companies are growing fast. Tesla went from $356 dollars per share to about $800 per share in less than a quarter, right? 2 quarters? How long? I don't remember. When did I get Tesla? 2 quarters, right? Half a year, right? That's growth for you, baby. Now that's growth. All right. So at that point, I don't care what Tesla, if it's valuable, if it's on sale or not, this thing is growing, right? So that's a growth investor. And then you have indexing. So this is where you're dollar cost averaging. So if you answered for the last question, if you said, "I don't have enough time for this because I have a couple of babies to take care of. I have businesses to take care of, right? I have things to do. I don't have time to sit here and watch things all day." Indexing might be right for you. So you're making as much money as the market is making. So if the market is up 30%, you're making 30%. If the market is down 10%, you're losing 10%. But it's okay. Most market crashes take about 17 months to recover. 17 months. This last market crash took 6 months to recover. So if you lose some money, this is part of investing. Buy more. When it's low, okay, buy more. It's going to take a lot for the entire stock market to tank forever and disappear altogether. Right? So when it goes down, that's in your dollar cost averaging. Now you're able to get even more shares of whatever you're buying with that same $500 budget that you gave yourself, or that same $1,000 budget. Okay. All right, guys. I don't want to talk too long. Okay, we're good. We're heading to any questions, guys. Any questions? Okay. So lastly, while you guys type your questions, we're going to talk about the different types of markets. All right. So we have the stock market where you can buy and sell stocks. We have the bond market, right? So those of you who are conservative out there, right? Those of you who are in the stage of protecting wealth, this might be the right market for you, right? A bond is essentially an IOU, right? The government is borrowing money from you. The municipality is borrowing money from you. The corporation is borrowing money from you, right? It's typically the safer type of investment. You can also, those of you with CD accounts out there, right? CD accounts are invested in bonds. Those of you with life insurance programs out there, whether it's an IUL or whole life insurance, right? That portion of your life insurance that is growing, right? That's getting dividends because that there's a savings portion of those whole life insurance out there, right? Those are invested in bonds, right? That's why it's conservative. That's why you don't suffer any losses. Okay, so life insurance programs might be right for you if you're more conservative. Bond market, that's all the bond market. Okay, commodities is like things like oil, gas, silver, gold, right? That's a little bit more volatile. That's a roller coaster. Okay, roller coaster. If you're aggressive, very aggressive, or even sometimes even moderate, right? Just get ready to ride that roller coaster. You might not want to use your entire portfolio in there. You might want to use your play money in there, right? Those of you who love Forex market is the riskiest, the most volatile market out there. It is up and down like a roller coaster. If you cannot handle the roller coaster, right? If you're not a roller coaster person, don't put your money in there. Okay. And then we also have cryptocurrency, which is cryptocurrency market, which is part of the foreign exchange market, right? So what is cryptocurrency? I actually wrote this down. Okay, so cryptocurrency is a decentralized digital currency based on blockchain technology. So every time you and I, so if I give you guys $1, right? Or if we go buy coffee together, we go to the register, we pay for our coffee with $1. Okay, or we swipe our card. There's a ledger, right? There's a transaction that took place, right? You took your $1, your physical $1, you gave it to the cashier and probably got back some change. Or you swiped your card, right? And then it registered so that, that you spent $8 on a coffee. Yes, I know. Coffee is like $8 nowadays everywhere. $7, $6, okay? Right? That you spent it. So cryptocurrency, because it is a virtual currency, there needs to be some sort of ledger, some sort of record keeping. Right? We got to record this somewhere. So, because it's created out of thin air. So, all right, here's this thin air that I'm giving you to buy this good. But we gotta write this down somewhere. We got to say that this actually happened. and that it didn't happen in my dreams or something, right? That this actually happened. And in order to keep records of this, they use blockchain technology. So that is what blockchain is. Blockchain is the technology that keeps records of all of the cryptocurrency transactions that happen worldwide. Okay, because we don't have a physical dollar to represent me giving it to the cashier or swiping the card, right? We need to record this somewhere. We need to have records of this thin air being given for coffee, and that is using blockchain technology. Those of you who want to learn more about cryptocurrency, by the way, we are having a live webinar on Saturday morning it's not Saturday morning. It's going to be Saturday at 12, so it's not morning, it's noon, right? With Jeremy Newsom Alexander, we're going to talk about Bitcoin, how to invest in Bitcoin, what is the strategy, what are the different apps to use to buy Bitcoin, crypto, and other cryptos out there, Dogecoin, XRP. So go ahead and type in a me in the comments. Type in a me if you want to attend the webinar on Saturday. If you can't make it live, don't worry. The recording will be available. I'm going to repeat that. The recording will be available. Katiana, is the recording going to be available? Well, I have to pick up my kids from karate. I won't be able to make it. The recording will be available. You don't have to be there live, okay? It would be nice to be there live so you can ask questions. Hint, hint, okay? So you can ask questions and everything and make sure that it's clear, right? But we're having a webinar on Saturday. Okay, on Saturday on cryptocurrency. We're going to talk about Bitcoin. We're going to talk about different platforms to use to buy Bitcoin. What is Bitcoin? Should I invest in Bitcoin? Is this whole thing a scam? What's going on? It's not even regulated. What is this thin air type of thing you're talking about? It's thin air. It doesn't really exist. Katiana, why should I even look at this stuff? All right, so just sign up for the webinar. Type in a me in the comments and I will send you the link. Okay. All right, any questions? I don't see any questions. All right, so that's pretty much it, guys. I don't see any questions. So investing is holding stocks. Okay. So it's either that you guys clearly understand my message tonight, or I gave you so much information that I blew you away and you don't even know what to ask. Which one is it? Was it that my message was super clear? Or did I just blow you away with a lot of information? Be honest with me. Because usually you guys ask a lot of questions, but I don't see any questions. So since I don't see any questions, I'm going to stop this live here. And I dropped my keys. Okay, I'm gonna drop the live. I'm gonna walk back to my apartment here, and I'm gonna give you guys some time to ask questions. Any questions on anything? All right. So the first question, super clear. Okay, so everything was clear. All right, thank you. I want to make sure I didn't forget anything back there. Okay. All right. So the message was super clear. All right. You're welcome, Claudine. So number one, your why. Why are you investing? Be as clear as possible. Right. Be as specific as possible. Number two. I don't even remember. Oh, risk management. I'm sorry. Risk tolerance. I don't have my notes, right? Risk tolerance, right? Can you do a tax ramifications from trading? Yes. Somebody asked that. Yes, I will do that. Actually, we're going to have a guest speaker on that. Because remember, guys, I'm not a tax strategist. I'm not a tax professional. So I know very general information, but I want you guys to understand everything, right? So I'm going to bring in the specialist and they're going to talk about that. Okay. Any other questions? Any questions? All right. I'm going to give you guys, I'm about to walk in to my apartment here. Hold on. I'm going to walk around and give you guys some time here. Any questions? Any questions? There are questions. Okay. What are the questions? I don't see questions. Companies to manage. What does that mean? I'm not sure what that means, Christun. Companies to manage. Oh, to manage a portfolio? Is that what you mean? Any brokerage out there that you're using? Remember, I don't know if you watched my live, the last live I did, alternatives to Robinhood. I talked about different brokerage accounts. Okay? All of those are companies that can manage a portfolio for you. Okay? I hope that's what you were asking. I hope that answered your question. So that would be TD Ameritrade, Vanguard, Charles Schwab, Fidelity, right? These are all brokerage accounts. Investment banks, any investment banks out there. BlackRock. Right, there's plenty of companies out there. Okay, all right. Well, I guess that's pretty much it. All right, everyone. Have a good night. Bye bye.